Thank you, Shireen. You are very kind and generous indeed. Ladies and gentlemen, I'm delighted and honored to be moderating the first session of the inaugural Ethical Finance ASEAN 2022. A warm welcome to everyone across the globe who have taken time to join us. I am Yvonne Chia, speaking from Kuala Lumpur, Malaysia, the headquarters of the Asian Institute of Chartered Bankers, or AICB. As we gather this morning against the backdrop of conflict in Ukraine, supply chain disruptions, China's continuing COVID lockdowns, market volatilities, rising interest rate and cost escalation, it is clear the pace and scale of changes on numerous fronts confronting us will be very different from the past. On that note, ladies and gentlemen, let me now give an overview of ASEAN to set the context of this leadership fireside. ASEAN is the Association of Southeast Asian Nations. It brings together 10 nation states into one organization based on consensual decisioning and independent sovereignty. Originally started in 1967 with the aim of ensuring political stability and deterring communism, today the 10 states of Malaysia, Thailand, Singapore, Indonesia, Vietnam, Brunei, Cambodia, Laos, Philippines, and Myanmar is a formidable economic bloc. A diverse and intertwined cultures and religions with distinctive levels of human capital development, ranging from example, Singapore's highly educated population and the extreme of limited access to education in some member nations. Population of 650 million youth from 19 to 30 years comprise over 40% of the population, and in some nations it is even higher. They are very adaptable to the digital world. In fact, ASEAN has the fastest adoption of digitalization, accelerated with the recent pandemic. They are also getting into conspicuous consumption with increasing level of personal and household debt. ASEAN is also locked into an economic system of traditional resource industry. We have 1/3 of the global rainforest in ASEAN, a GDP of over US 3.6 trillion and growing. The growth rates has been high, averaging 5% for the past 10 years, though different nations are at different stages of growth. The benefits of economic growth, however, has been unevenly distributed. For example, in Singapore, per capita income is amongst the highest in the world, close to US 80,000, and we have the lowest, close to 2,500 US dollars. There is strong intra-regional trade and tourism with an open sky policy among the member nations. ASEAN is also dependent on FDI flows and exports. Next to China, ASEAN is a center of supply chain and outsourcing for the developed economies. The record of human rights and treatment of low-end workers has much to improve. There is a very diverse picture from manufacturing of low-end labor-intensive industries for the majority member nations relative to the high-end technology sector in Singapore. 40% of businesses in ASEAN are family-owned. ASEAN has also over 90% of businesses registered as SMEs and is a major source of employment and jobs. Invariably, ASEAN country debt has increased, especially with the recent additional funding for subsidies and cash payout during the pandemic. Now further exacerbated with weakening currencies and rising global interest rates. Some of the member nations fare low in the governance and corruption index. So, as I set the stage, there are some clear trends that I would summarize, as well as the current state of play on the climate impact in ASEAN. Uncertainty about economic growth just emerging from the pandemic. Geopolitical implications in our front yard, from the China-US trade sanctions to China's slowdown as major partner of ASEAN, the chain effects of the Ukraine conflict causing rising inflation and food security challenges. These weakening currencies and rising debts, increasing poverty and income inequality. Definitely, there is a trust deficit amongst the community and societies on government and institutions. And then now there is a challenge of rewiring the economies to transition to net zero and addressing the UN ESG agreement. There is a fear of disorderly climate transition, as well as there is not enough skill sets and talent, and capacity building is way needed. The climate impact is very clear. CO2 emissions have been increasing. Energy consumption is on the rise. Most member nations have stated their commitment to net zero between 2050 to 2070, depending on the sectors. The region is among the most susceptible to climate change, in particular, with extreme conditions from flooding to urban heat, volcanoes, and rising sea levels. And in some member nations, they are the center of plastic waste imports from developed countries. IMF reports that GDP can be reduced by 11% by 2050 if we live as is today. And there are some other reports that's even more frightening, that GDP can be reduced as much as 35%. The S and G in ASEAN are perceived to be more immediate and urgent, as this affects their daily survival. Vulnerable communities, girls and women participation are seen as more pressing issues. All said, ASEAN has been proactive, setting up collaborations via multiple ASEAN platforms and frameworks across energy, agriculture, transport, and with both government and public institutions involved. There are also private networks and private collaborations like the ASEAN Climate Governance Network and the Joint Committee on Climate Change. Hopefully, I've shared with you all the context of opportunities and challenges for ASEAN. Achieving net zero globally will require the deployment of around $5 trillion annually by 2030. So what is ASEAN's deployment capital for transitioning? What will sustainable finance look like within the real economy, and how are banks handling it? How can the different perspectives and interests with the diversity of ASEAN member nations be brought together, and what role should finance play? As we speak, calls to water down ambition, compromises being discussed in EU countries like Germany and Denmark, reverting to coal, announced in the last few days. How would that impact developing economies like ASEAN? Intentions, commitments, declarations have been set across the globe, including ASEAN. And understanding the commercial and national implications, the what and the why. The speakers will now frame their experience and insights on the how, the core challenges for the ASEAN region in financing climate adaptation and mitigation, the action plans at local and national level at the respective banks, including Islamic banks and asset management institutions. How will they lead change and support the transition in ASEAN, as well as sharing some early successful responses from their global insights? Let me start with Rene Buehlmann. Rene is the CEO of Asia Pacific Investments at abrdn since 2021. He moved from UBS, where he was there for 29 years, including being head of asset management, Asia Pacific, and the regional UBS Group Executive Committee. He has been in Asia since 2005 in leadership roles in corporate and wholesale banking, wealth, and asset management. In the front line, leading and operating on the ground across Asia Pacific. He is currently based in Singapore. Over to you, Renee.
Thank you, Yvonne, for that introduction and the exciting also what you highlighted, the global macro challenge. As you highlight, for a regional asset manager, And certainly from our perspective, we do believe climate change or the decarbonization can unfortunately not wait. You know, the inflation is tamed or any of the other global macro challenges are so. The next couple of years are super critical. The world needs to decarbonize. Without Asia, there is no decarbonization in our perspective. Of the emitters, we have 5 of them here in Asia, which means we need to start teaching how we here can help and accelerate and finding a solution. However, is on a very different path economically, because we do have still more infrastructure, we have a faster growing population, so we actually need energy, more electricity, and hence we still have to do catch-ups. Whereas we need to find a way to do an energy transition that is just and not conflict from one day to the other, decarbonize, but really look at transition. From our side, from an asset management perspective, we are working very closely with investing in developing transition plans. So our is not one of exclusion, it's really around how can we help and engage with the working with in developing transition plans and thereby help facilitate the firms that really do have a plan to help in the transition. Now, Yvonne, in your summary, there is a lack of expertise in the region. Certainly from our perspective in the asset management world, we have established in Singapore what we call the Institute. And our goal of the Institute is to bring together on one side our clients, understand how they can help us in this transition, regulators across the region so that we can harmonize and then facilitate what we need from, and likewise also spend more time to educate more talent specialists across the region. So we have hosted just most recently our first sustain. It was very interesting to see the huge interest that we actually see from all stakeholders. So from our perspective, in summary, I would say asset managers have an incredible to play in this process, not only by influencing the firms that we need to help educating the investors more on how they can do involve the transition.
Thank you, Rene. We will now go to the second speaker, Raja Amir Shah Raja Ashwa. He is the CEO of Islamic Bank in Malaysia, HSBC Amanah, an award-winning CEO, deeply entrenched in the debt capital markets on Sharia and sustainable finance. Islamic bonds, Sukuk, having won amongst them several awards of the Islamic ESG Bank and the Asset AAA Islamic Finance Award several times. He is a strong contributor to the Malaysian Islamic banking, and he's now on the journey to transform the bank he leads, HSBC Amanah, to be the group's first sustainable bank by the end of 2022. Over to you, Raja Amir.
Thank you, Yvonne. It's a pleasure to be here and to be speaking on this topic with such an esteemed panel, and also in respect of a topic which is very close to our heart. So, you know, in terms of the role that financial institutions need to be playing in, you know, ASEAN as well as globally is very important, given the fact that banks are key mobilizers of capital in the markets. So what we, you know, in terms of what the Islamic banks in Malaysia are vying to do in line with what Bank Negara has created, which is value-based intermediation, is really to put at the center of our decision-making. Profit is obviously central and key, but there's also people as well as the planet. So in terms of the situation that we're seeing, globally as well as regionally, it's very important for banks as source of funding for corporations, which really range from as diverse as eco-friendly renewable energy companies, all the way to billion-dollar oil companies. So what banks decide to give their loans helps determine the direction of the economy and to an extent, the future of our societies. What is clear to us, Yvonne, is that public funding will not be enough to finance the sustainability transition. So what the banking sector can and should do is to stimulate private finance. And this can be conducted through various means, such as socially responsible investing, impact investing, social banking, as well as sustainable lending. We are very encouraged to see that in ASEAN, various countries have publicly declared that they are developing their own taxonomies, such as Malaysia, Singapore, Thailand, and Vietnam. And as mentioned, in Malaysia, financial institutions will be required to comply with what Bank Negara has termed the CCPT, which will become compulsory by the second half of this year. Now, the CCPT is a climate-based taxonomy, and under that particular framework, banks would need to report in terms of their exposure to environmentally sensitive industries. And as I mentioned earlier, Yvonne, in terms of value-based intermediation, which is spearheaded by Islamic banks in Malaysia, once again, this is a voluntary initiative with amongst Islamic banks as well as DFIs, and HSBC as being one of the community of practitioners which was founded VBI in 2017, are playing our part in terms of creating our own sustainable financing framework. So if I can talk about some of very quickly in terms of some of the developments which have been done in terms of mobilizing finance towards green, social, and sustainability. In the 6 largest economies in the region, green, social, and sustainability debt had hit $24 billion last year, which was up by about 13.6 billion in 2020, which represents a 76.5% year-on-year increment. In addition, sustainability-linked debt totaled 27.5 billion, which is a jump of about 220% from 8.6 billion in 2020. So in conclusion, in terms of what banks should and need to do is that we, given the central position that we face in mobilizing capital and providing financing to all layers of society, need to have sustainability at the forefront of what we do and embedded into our DNA.
Thank you, Raja Amir. That is a very good perspective from Islamic banking. And we will now turn on to Sheila Laag, Sheila, the third speaker. She is the Global Head of ESG Specialist in the Sustainability Center out of BNP Paribas Asset Management, based in France. Formerly an investment specialist for convertible bonds and European equities, and in client-facing and marketing roles. Sheila is now in charge of communicating with clients and externally on the center's research, policy, stewardship, and industry engagement activities, including supporting investments, teams in integrating and reporting on ESG factors. Sheila, I think this is going to be very interesting to hear from you. So over to you, Sheila.
Thank you very much, Yvonne. And I'm just to say I'm very happy to be on this panel this morning. So today I'm replacing our CEO and head of the region, Angelia Chin, who will be moving to Singapore from Malaysia. Angelia is part of the Joint Sustainable Finance Working Group, working with ASEAN regulators on the ASEAN taxonomy. So we really are fully on board with what our 2 previous panelists have been talking about, what's moving in ASEAN. It's pretty new to the region, but as you underlined, it's really of extreme importance because everything that's going on in climate change will affect the GDP of ASEAN countries. And from the BNP PAM point of view, we've seen an increase in the interest for ethical and sustainable finance, both from regulators, and Amir mentioned the principle-based taxonomy of Malaysia, Indonesia with their green taxonomy. We also have, and I think that's really important, governments setting net zero target across ASEAN countries, with the earliest at 2050 and the latest at 2065. And finally, I think investors are really seeing sustainable finance as a new trend. Of course, Malaysia and Indonesia already are used to having Sharia compliance. So this is really the basis for sustainable investing, and it means that they're familiar with an exclusionary approach. And from our point of view, we have been committed to sustainability we are committed to sustainability on a global level. We're present in 10 of the ASEAN countries and of course, all over the world. And we have been accompanying our clients on their journey to sustainability, engaging with portfolio clients, portfolio managers, and really telling, I mean, you mentioned that we do ESG integration, also sharing our experiences there. So we're trying to, start, make sure that the region goes forward in an organized way and using what already exists in the world. I think it's not worth starting everything over again when we already have the basis elsewhere in the world where things have been started.
Thank you, Sheila. I will now take the opportunity to have the conversation with the three of you. I will try to pose a question to maybe any one of you, but if you feel that you would also like to contribute, please feel free. I guess what we have heard quite clearly from Renee and from Sheila, the people from asset management, is that they are very clear that they do have a very strong role to play to impact positive investing. Now, the asset management are more investors, which they can easily, probably, much easier positions than, say, the banking institutions, who actually have a portfolio on their books that they will have to guide the transition to net zero. The asset managers have a situation of either we invest or we don't. We may take some time to exit or to increase our portfolio towards the green portfolios, but there is facilitation, there is engagement, but it's quite a different journey than from the banks. So, of course, the banks very much have to be involved with the real engagement and transition, understanding the materials, and really going through the very detailed, all the way to scope 1, 2, and 3 of net zero decarbonization to ensure that they can continue to land. So now there is this buzzword called just transition. So if I may put that question to all three of you, to feel free to comment on that. What do you mean in your context of asset manager, in the context of an Islamic bank or any bank in particular, do you mean by just transition, and how do you go about it and actually making that on the ground? Anyone would love to start off first?
Yep, happy to kick off with that question. So if I may come from a perspective of financial institution, and I think it's extremely important when we talk about the just and orderly transition, because as we all know, the last 2 years has really been a game changer for a lot of people, countries, individuals alike, right? So, a lot of people are coming out of the pandemic now, and there's a lot of data to show that especially ASEAN economies are rebounding and are benefiting from the surge in commodity prices, of which a lot of ASEAN economies are benefactors to that. So what do we mean exactly by a just transition? And that's exactly what is the conversations that we are having across the portfolio with our clients. Now they are sort of between a rock and a hard place, because they are aware of the situation where there's increasingly becoming more focus on the E and the S and the G. And even down to the supply chain as well. A lot of Nestle has made public announcements that they won't buy from suppliers who do not meet certain criteria. So, you know, when we say a just transition, it really means that everybody needs to work hand in glove in order for us to move forward with this. And a lot of the conversations that we have with clients are, you know, basically, why do I need to do this right now? You know, I'm trying to survive as a going concern. You know, other concerns which are understandable given the state of the global economy. But nevertheless, this is something that needs to be done now, whether you like it or not. You could call it, you know, similar to something to the effect of digitalization. You know, you don't see it as a cost, but see it as an investment. And if you don't, unfortunately, do it now or plan for this in the future, you know, you're not future-proofing your business. Because as we move forward, and I'm sure my colleagues on the line will also tell you in terms of asset allocation, that this is increasingly becoming a point of focus and concern. So therefore, you know, Yvonne, just to sort of conclude on that basis, you know, this is that period of time where we're going through that change, and it's important for us as providers of capital from a financial institution basis, and also for our clients to move hand in glove in this trajectory. And if I can just conclude in terms of, you know, whilst, you know, it's from a regulatory perspective, there's also increasing scrutiny coming onto the financial institutions. Some financial institutions are also voluntarily putting, you know, certain criteria of selection of how many % of their portfolio will be in alignment with, you know, value-based intermediation, for example. So, you know, what we are doing at HSBC Amanah is that we are on this trajectory to become a value-based aligned institution, inshallah. And with that means that we have an ambition that 51% of our financing and advances will be aligned with the triple bottom line principle. And, you know, that whether we can achieve that or not, or by when do we achieve that, really is, you know, is in respect of how can we do this together with our clients, because, you know, if they're not playing ball, then it's going to be difficult for us to grow those asset base.
Thank you. Any one of you to comment on the asset management side?
I can comment if you want.
I think I saw Renee there. Between both of you, who can go first?
Ladies first.
Ladies.
Absolutely. You go.
Okay, so the just transition is something which is close to our hearts at BNP PAM. Why? Because we have a forward-looking perspective around three key issues, which are the energy transition, environmental sustainability, and equality and inclusive growth. So our idea is that those three themes really underpin more sustainable markets. And so we can't just go for the transition, just go for the environment, or just go for the social, but all three need to go together. So that is something which is you know, visible in how we study companies, how we look at sectors, etc. And to go more deep down onto the just transition, it's important for companies to deal with this. But honestly, a just transition, everybody has to take part. So we have to also attack it from the stewardship angle, talking to you know, public policy, politicians, regulators, because it takes a village to do a just transition. It can't only be done through private finance. We've seen examples of how coal mines were closed in Spain, for example, and there it was really a joint effort of the local governments, to the companies to help to retrain, to recreate other activities, because of course you have a basin of people who are working in those areas, so they can do another job. They are skilled, so you can retrain them. So I think that is also an important aspect to think of talking and encouraging governments and regulators, because, you know, privately it can't all be done through just private means.
I think Renee has something to add as well.
Yes, so I think everything that both Raja and Sheila just mentioned, I would start probably first with educating our investors what we do mean by, because sustainability still means very different things to different people. We need to educate our investors a lot around what in our case, that means particularly when it comes to ASEAN, that you absolutely should have companies, so companies who are still in the sectors that are affected in your portfolio. Make sure that you have a process in place as an asset manager where you go system sustainability policies of these different companies. And I think there is a lot of teaching with the firms. We find a lot of companies that we engage, they want to learn around, so how are other firms doing it? And by helping them to have a plan for, for example, how do less waste, how can they over time have a better sustainability role? Engagement helps the transition. And we believe that over time, actually we find also company owners, they know that this is the path to go. It's just to use early on how fast they can get there. And I think there is where also regulation comes in, right? It needs to be a hand-in-hand process where there is some or pressure to some extent. Then also the investors need to put certain collaboration across, I think, investors, regulators, companies, blood.
Absolutely, Renee, because you've been in Asia for many years, and education and awareness can be tough, especially when it comes to the dealing with nature, the lack of belief in science, and belief that God caused all this can be quite challenging. But it's going there. We're all going there because the new generation of youth will help in some ways engage the older generation, their parents, as to what science means and what science can help in us adapting to the climate changes. Now, I hear that you are very clearly a proponent of education, getting awareness, and facilitating capacity building, I would say, to help us towards addressing these challenges. So I would like to ask that question, Renee, as to what extent, if you look at it from the perspective of the poorer nations, be it in ASEAN or anywhere, where they will really need help, financial, in the adaptation process. So if you listen to many of the multilateral platforms today, there's a lot more requests now or conversations on the table as to how developed economies can fund and help fund the adaptation process for the poorer economic nations. What's your view on that, coming from global banks like where you are today and where BNP Paribas is today? Thank you.
So I think this is where I think events like become super critical, where we create the connectivity forums, environmental groups, regulators come with the challenges and sort of like align the efforts, right? And I certainly, from a European perspective, there is a lot of efforts around reaching out also to a policy perspective on environmental policies. There is a lot of dialogue around it. It is by now understood that the cycles of the economy are different. Now, where the rubber hits the road is, to your point, how are these initiatives? How do we negotiate who should do how much by when, right? And as we all know, that's when politics comes also into the way.
Yeah. Sheila, do you have any comments there?
Well, I mean, I think it can, of course, we can do things from maybe from a blended finance point of view with big development banks encouraging private investments, because we know that it can't all be done with public money. If we're thinking of adaptation in particular, where countries are going to be affected, and when they're very poor, they maybe can't pay for that. So I think there's that kind of financing where private money can well, private, not public, can come into it. And then of course there's the commitments of a number of developing nations that are not being respected as much as they should. They haven't been paying as much as they should. That's another place where of course financing will be coming from to help those countries. But I think that blended finance should also be a good a good road to go down, where an agency or a bank will support investors on a good project.
Yeah, I think in view of time, we will have 2 more questions, right? I understand. So let me just thought that Raja Amir, the value-based intimidation is the so-called the good purpose of Islamic Bank. Why is it that we cannot bring it to the mainstream? In your view, are we converging sustainable finance now with the value-based intimidation philosophy? So invariably, when BNP Paribas, for example, or Aberdeen comes up with the new sukuk bond, for example, or even a new green bond, a new sustainable bond, it would have qualified in many ways within the Islamic banking value system. Would then sustainable finance per se be converging with BVI? I'd like to hear thoughts on that. Thank you.
Yeah, thanks, Yvonne. It's an interesting question. And in terms of the convergence of Islamic finance as well as sustainability and value-based intermediation. So, I mean, a lot of people argue, and I think, Sheila was sort of mentioning it beforehand in terms of, Sharia compliance and the exclusivity, or rather the Sharia screening methodology, which from the start, even before ESG was even a word, and that's what a lot of people claim, was already excluding certain sectors which are deemed as defense, weaponry, alcohol and tobacco, so on and so forth. So therefore, there is increasingly a convergence between sustainability as well as Islamic finance. But there's also some gaps that we must acknowledge as well. You can raise Islamic financing for in the past there's been coal-fired power plants which have been financed by project financing sukuk and so on. But nevertheless, in terms of, so there are some convergences and there's some gaps. That's to answer your second question. In terms of bringing it mainstream, now mainstream is something, again, it's when we say value-based intermediation, we are not forsaking profit. Profit is clearly, there's a responsibility to shareholders, there's a responsibility to stakeholders, but there's also an increased awareness of the role that you play as an institution in society in terms of the impact that your financing provides to the communities in which you serve. And, so I feel that number one is that when you integrate value-based intermediation into your decision-making, number one, you are also, you're not forsaking profit, that's clear. And number two is also that because of the impact that you're providing for, society, you're actually creating a multiplier effect. Now, we've seen situations, where there have been financial institutions in the globe, just to name two of which, one is Triodos Bank, as well as Van City, which is sort of a funding entity, so Triodos Bank. And, looking at their profitability, they've never forsaken profitability, they've never forsaken governance or risk, and they are clearly, a value-based intermediator. So therefore, also, that is a live case example of an institution which is brought that to the core of their funding methodology and not forsaken profit. And also when we talk about the kind of companies or the projects that you finance based on value-based intermediation, intuitively one would say that they would be much more sound and risk safe for the financial institution, because they pass certain matrix that you would have put in place to screen and only qualify for the best companies. So yeah, that's just the quick and dirty of it. But I mean, what we also have seen is that, I mean, and I'm sure my colleagues, Renee as well as Sheila, can attest to that, data has shown that investment in, even from the fund management perspective, investment into companies which are socially, who have socially objectives have returned, investments performance which is higher, and also in terms of the volatility has also managed to, withstand volatile situations.
Thank you. Renee, in your frontline activities with your clients, would you say today, because of the ESG considerations, they are prepared to have a lower rates of return on the performance of those portfolio that they have? Is that becoming an increasing trend, or is just some spurts now and then, especially when they see the recent announcement of some of the EU countries going back to coal, for example? How do you see that?
Very clear. Investors expect the same return or better through. You can go through every single survey. There is wishful thinking for us that we do sacrifice. It's absolutely not. And I think particularly in Asia, investors are very happy to go ESG compliant and sustainable returns, right? I mean, absolutely, that's still the case. And I think that's a challenge for us. As I do believe, and we have built a lot around climate scenario tools where we long run demonstrate that companies who have ESG framed risk, they have different plans, they will perform better because they have just a better ambition for through what you mentioned, flooding and all the risks that are out there. But on the short term, through the Ukraine event, not the case, right? And clients will not wait for us on this.
Yes, thank you. Sheila, one last question to you. Sitting where you are in the center of Europe, as well as in France, the headquarters of BNP Paribas, a global bank. What are the early success stories, or whether it's our policy or collaboration, or even technologies that have improved and have helped the climate change transition, that you think that can be shared with Asia? Is there any early success stories or that you think you can share?
Well, I think around collaboration between countries, everything that's happening and which has been pushed by the European Union around, the technical experts who, for example, set up a taxonomy, which we have seen that, countries in APAC are looking to see that taxonomy. It was set up by a group of, why not take advantage of that in ASEAN? We've seen that Singapore actually looked at the EU taxonomy to see how it could be adapted, and China has worked together with the EU on a common ground taxonomy, CGT, to make sure that there's consistency from one market to another. So I think that Europe has really shown the way on how we can collaborate between different nations all together by also setting up, the idea is to redirect finance, and I think that is the basis of it all, and that is done through the taxonomy, through fund regulation, and through ESG disclosure. What we need is consistency in standards in those three types of regulations. So I mentioned, the taxonomy and how Singapore is already, looking to apply it. But even if you look at fund regulation, today it's possible for asset managers to use SFDR disclosure to meet Hong Kong regulatory requirements. So, if that kind of thing can be multiplied, then we can really have, and if SFDR, so it's Sustainable Financial Disclosure Regulation, it's all about transparency. And I think that's what we're really looking to, not only for us to invest, but also to show to clients, and so that clients can then compare across the board what is comparable on the same terms. This is the same with MiFID, where we're going to ask clients about their preferences, their sustainable preferences, without convincing them, but just showing them, well, this is what there is on taxonomy, this is what there is on sustainable investment, this is what there is on the principal adverse impacts. What is it you want to see in your portfolio? I think that sort of brings the whole community together, because unfortunately, I can't remember if it was Renee or Amir who mentioned it. Not everybody looks at sustainability in the same way. So if we have to really put it on a level playing field, and that's what SFDR and MiFID are doing. And finally, around ESG disclosure, it's great to see more and more initiatives, but let's use international standards. So companies are disclosing ESG characteristics in the same way across the world, and we as asset managers and even banks looking at those clients can have the same information and to be able to judge across the board. And that I don't think should put countries that are emerging in a bad position, in the sense that, in any case, how we look at it is that we are going to compare companies that are in the same type of region. So we're not going to compare a developed nation a utility to a developing nation utility. So we totally agree that we're not all at the same level of advancement, but we can also agree that developing nations should look to the type of thing we have established, because there's a kind of a blueprint, and there may be some local differences, okay, but the spirit has to be the same.
Thank you. It looks like we have to end the session shortly, but what I would probably do is very quick, some concluding remarks. We have heard very clearly that the new stakeholders of environment and society is now front and center of our conversations. So whether you're in a developed economy or a developing economy, or ASEAN for that matter, for the first time, I think the world is finally converging to knowing and acknowledging the fact where you need to rewire our own economy and nations to going forward. And as you said, whether developed or developing countries, over time we will converge. We obviously cannot ignore what's happening. The discourse has made it very clear, and therefore the changing nature of leadership and the preparedness of nations. It's a complex movement. The role of business, purpose in society, financial institutions, asset management companies, investing community is core to solve together with regulation policymakers. In fact, what Renee said just now, mindsets and paradigm shifts, education, and the whole of leadership will need to change to deliver value and purpose, as well for us all to respond to the climate and the social crisis. So it's capacity building that we talked about, the confluence of science, academia, technology, collaborations, private-public relationships, the whole of government, to ensure that we have a consistent, transparent, and just transition. In the process, not to forget integrating the S and the G. We need to break from the past and take the opportunity to redefine business models. In fact, I always say it's actually the best time to redefine your own competitive advantage, be it a company, be it a bank, be it a country, a nation. I think our competitive advantage can change if even the nations as a whole do not, and the government or the political leaders do not realize that it's those who are prepared, those who are willing to take the change and go to some short-term pain will be the long-term winners. With that, ladies and gentlemen, it's been wonderful to have my colleagues with me today, and I want to thank each and every one of them to have contributed to this leadership fireside. So have a good session in the afternoon and going forward. Thank you very much.